Today's topic is the very exciting topic of insurance. I'm sure you're all excited. Welcome back. There are some really bad attitudes out there about insurance, that it's a waste of money. It really isn't if you buy the proper insurance. What you're doing is you're managing risk of loss, of taking on that loss all by yourself. Insurance doesn't prevent fires and accidents and illness, but it protects you from financial suffering from those things that you can't fund yourself. And by managing risk, you're managing your solvency and your security. What is the function of insurance? It's to spread the risk among a large group of people so that any one member doesn't take the entire hit. Types of insurance you should have: auto, health, disability, homeowners or renters, term life, and umbrella liability. For your auto, just insure the things that pose a risk without a bunch of add-ons. You don't need collision on an old junky car, for instance. And you can always raise your deductible to $500 or $1,000. That'll bring your premium down. Term life insurance. You want to insure the breadwinner of the family. A stay-at-home spouse can also be covered, because if they died, the breadwinner would have to hire help to raise children. There's no reason to have life insurance on children. They'll tell you that it's to protect their insurability, but that's just a line to try and sell it. You don't need it. Kids' insurance will still be cheap when they're in their 20s and 30s, so you don't need to insure them when they're very young. Pointless. As you near retirement, the need for insurance should decrease. That's why you have a term policy that ends at close to retirement or retirement. And because you're protecting future earnings, and if you're retired, there isn't going to be any future earnings anyway, there's no reason to have it. Presumably by then you'll have saved enough for retirement. Disability is a good insurance to have for the breadwinner in case they can't work. Aflac is an example. Umbrella liability is very inexpensive to have. You can add $1 million or $2 million, and the umbrella part of it means that whatever your auto and homeowners doesn't cover, it takes over and it covers in addition to that. That's why they call it umbrella. And people are very litigious today. They'll sue at the drop of a hat. So it's a good idea to have it if you have property. Find a good insurance agent. I like independent insurance agents because they can represent many different companies, and they can have you in the cheapest one for your home, maybe a different one for your auto. They're not locked into one company like, say, a State Farm would be. A good insurance agent will also go over your policies, sit down with you once a year and go over everything and just make sure that you're covered properly. If they don't meet with you every year, find a new one. They're just there to get the renewal premium. Where don't you need insurance? You don't need to buy insurance for things that are not that expensive, like a toaster, or in other words, don't buy extended warranties. They are run by insurance companies, and they've done the math. They know the odds of that toaster breaking, and they're there to make money. So the odds are they're going to collect more in premiums than pay out in claims. It's just a numbers game. So don't buy extended warranties. Also, you don't need to buy separate insurance for the following things: heart attack, cancer, stroke, credit card payment protection, mortgage insurance. Just cover that with your regular term insurance. Accidental death or identity theft. You don't need any of those. Additional ways you can save money on insurance is to bundle your home and auto policies with the same company. Keep your credit score good. The higher credit score you have, FICO score, the better rates you get on insurance. And you can pay your premiums less frequently, annually or semi-annually. That'll keep them lower. And that's it for insurance. Hit subscribe or go to my website, rockledgerinc.com, to buy the book, Understanding Money. Thank you. See you next week.